Welcome to this episode. In this episode, we'll be looking at the kind of trader that you ought to be at the end of this course. Also, in the beginning, you should be able to re-evaluate the kind of trader that you are. So for those who are first-time traders, we are going to discuss on the different kind of traders that there are in the trading cycle. And also, if you are an experienced trader, we are going to discuss on the kind of traders there are in the market, so that we may be able to, out of this lesson, we may be able to go into we may be able to get a broad perspective of the kind of trader that you ought to be at the end of this course. Yes. So we are going to understand the kind of trader that we are supposed to be, either who you are right now and what we ought to be at the end of this lesson and this course. And also we are going to understand who conditions the market. So let me start with who conditions the market. So I know that if you have been trading, or for those who have been in the trading platform, or maybe you have had someone who has come to say that, you know, that they know where I had placed my stop loss, so they came for my stop loss, and then later on the market moved away in the direction which I had conditioned the market to go. So most traders think that maybe the broker, they knew where my stop loss was. But when we come to get to know who conditions the market, I would like for you to come with for whatever you have learned or heard, just come with no previous knowledge of that, so that we may be able to understand how the market is conditioned and how the market is priced and how it moves. So who conditions the market? So the market moves. If you go to the charts, or if you have been in the market, you will notice that the market moves efficiently. And that's because there are people who are liquidity providers. There are also people who influence the market, who are called the smart money. And also they are also uninformed money, or speculative money, which is either willing or unwilling liquidity providers. So for those who influence the market, generally the smart money, they know that the market is traded in an efficient way. And if traded in an efficient way, us as a trader, or you as a trader, or me as a trader, my aim is to come and also to trade like them, because they know that they are the ones who influence the market. So who conditions the market? Also, banks are liquidity providers. I cannot say that the brokers are liquidity providers. They are just a platform for the trader to come and buy or sell. So they don't know whether the market will come for your stop loss. They don't know where you have placed your stop loss. But the informed money know that there's a high probability for you as a trader, you will place your stop loss at the lowest low, or at a swing high, a highest high. So something like that. So, and that's where, as a retail trader, your stop loss is being hit, then you come and accuse the broker of knowing where your stop loss is. So they don't know. So there's also you as a trader. So you are either a retail trader or an institutional trader. So the retail trader, they go with the ordinary concepts that are provided in the marketplace. So you see that there are platforms that tell you to have indicators. It's not bad to have indicators, no offense to that, but the smart money, they don't trade using those. The smart money, they are informed money. They know where the liquidity is. So if, say you are a buyer and you place your stop loss at the nearest swing low, of course that's a willing, or for you it may be willing, or for you it will be unwilling liquidity. So that low, having placed your stop loss there, that's liquidity for them. They know that there is money there. So as the informed money, they'll come for that stop loss and then reverse in the direction that you had placed your market order or pending order to go to, which was the buy, and then the market will just rally up. And as a retail trader, you'll be left wondering, hey, how did they know that I had placed my stop loss here? So as a retail trader, retail concepts involve indicators and many concepts, many indicators, many ideas. There are so many out there when you go to Google. Yeah. So if you are an experienced trader and you have come you have come across this course and you know that you have been using the retail concepts, I have no offense to that, but I would urge you to just come with an open mind and try to understand where also I am coming from, so that we may be able to reach to an agreement of how the market is conditioned. So at the end of this course, I would urge you to be an institutional trader, because as an institutional trader, you are trading as the people who condition the market. You are trading as the people who influence the market. So you are just those who influence the market. They have large sum of money, but you as a trader, the money that you have, if you deposit $10,000 or what, it cannot come to a fraction of the kind of money that those large funds, the institutional, the smart money, they have. So, but your aim is to come, trade like them, hide in the midst of them and make your profit and get out. So the institutional traders as an institutional trader, you have to understand that the market is efficiently traded. So, and the market, you have to understand that the market will always trade in an efficient manner, always. So the market will rebalance, run liquidity, rebalance, run liquidity, rebalance, on and on, run liquidity and rebalance, only that. And then the smart money have an advantage of pricing, because they already know what perspective of an informed money, and they know how to manipulate that perspective at any given time. They know how the retail traders think, how they move. They know it. So their aim is to come and manipulate that perspective at any given time. So to understand the interbank delivery, you have to understand this and come to the exposure of now what we will be learning, and that exposure will create experience so that we will be able to trade as the smart money. So as I said, there is uninformed money. Retail traders, those concepts, because those concepts are used by the smart money to manipulate the perspective of the uninformed money, which the retail traders use to their advantage at any given time. And so that uninformed money, it is just liquidity for smart money. So that is where you come as a trader and say, how did they know that I had placed my stop loss here? Yeah, so that answers that question. So I hope that we'll be able to come to an understanding of which side should we take. Should we trade as the retail trader? Should you be an institutional trader? Should you trade as the smart money? Should you know that the banks are liquidity providers and trade as the smart money trade? We should come to understanding of that the market is efficiently traded. The market is always efficiently traded. So at the end of this, we'll be able to, I would urge you to go with this new idea, with this perspective of trading as an institutional trader, so that when we get exposed to these concepts, we'll be able to create experience, and from that experience and exposure, we'll be able to come to an advantage of making money from the markets. See you in the next lesson.